Perfect. Good afternoon, everyone. Great to see all of you. I think we have a fantastic set of people here, leaders from the financial sector. Thanks for joining us for this amazing panel discussion. Thanks to the lovely audience. Thank you for being patient and thanks for staying with us. What we'll try to do together as a group is probably cover how we have seen financial world evolve, both in terms of lending, payments, wealth, with technology. We here have, Mr. Ratan Kesh, who has had the experience of working with some of the largest banks in the country and is today leading Bandhan from the front. We have Gaurav runs a fantastic fintech called mPokket, where they have been, looking at cash loan, micro cash loan, and they've been building a fantastic book. So we have a fintech experience here. And also with us, we have Anup. Anup Agarwal represents one of the largest funds, IFC, which is backed by World Bank and today, has an experience of investing in some of the smartest startups in the ecosystem. So fantastic set of audience here. So maybe first question to you, Mr. Kesh, to start with, right? In your experience, while at Axis, at HDFC, and now here at Bandhan, how have you seen technology be at the core of banking, at the core of what we did, right? How have you seen technology play a role when it comes to providing banking services to communities across segments today in India?
So I think it's, thanks Rajat. I think first of all, thank you NESCOM for inviting us to this forum. One of the reasons that I come here to also listen to some of the other speakers. We had a great panel discussion, the previous one, fantastic conversation on AI. So look, in banking in India has transformed significantly over many years, and some of the words that I will say, it's almost like a cliche. We are in the business of technology, just that we use banking as the lever for doing our business. Now, I think you touched upon the specific point about how do you really take it to the community. Let me address specifically the point that we at Bandhan Bank do. We have got, as a bank today, we are an universal bank with roughly around 40% is microfinance. The remaining 60% is the universal part of the bank, which includes commercial banking around 25%, housing another 27%, rest is retail bank. But the largest chunk of our portfolio continues to be microfinance, and that segment is catering to 1.3 crore customers who are at the bottom of the pyramid, and the ticket size is roughly around 70,000 rupees. Now these borrowers, all of these are women, all of them are entrepreneurs. So think of a situation wherein 1.3 crore women, they are entrepreneurs. They could be jerry maker, they could be selling some products, they could be doing something with garments. They all are creating jobs, creating livelihood for them, their family, also creating few jobs. And I would actually, before I talk about technology, it will be very relevant to talk about one or two use cases of how it's beyond financial inclusion to more financial empowerment. We have these customers. We do 23rd August, we do our Foundation Day every year. Last year in the Foundation Day, we invited 8 customers in the Impact Pavilion to showcase their products. This lady, Miss Maiti from Nadia district, she came. She produces this swing, Jhula. She started off with a 12,000 rupee loan 12 years back, and she was displaying that she had a contract from Singapore government for 33 crores. She has 400 employees, 80% of them are women. That's the power it has got. That's little 12,000 rupee 12 year act back could create, that's the empowerment. Now, in terms of technology, as I was telling you in the before the meeting, that we have a very take and touch model. We have got 45,000 people who are going, meeting these borrowers, scouting for new borrowers. They look at their business, they understand their household income capabilities, creditworthiness, inputs the data in a tab. Each of them is carrying a tab. Once they input the data in the tab with some of the customer profiling and the household income details, everything else is taken. The tech takes care of everything. It's an AEPS based disbursement capability. The borrower is given the money. Collection is done on cash largely and QR code, a combination of that. But then once it is inputted, everything else is tech. So there is a great deal of both touch and tech that is working on in terms of really powering this segment. I think I will pause here, and I think probably we'll come back and talk more about this element of it later on.
No, fantastic. I think, thank you so much for, putting light on that. Absolutely. I mean, if I look at a segment like MFI, and if I'm looking at and maybe I would love to understand a bit more in terms of when we say that a customer is coming and inputting detail on the tab and we are looking at assessment of credit worthiness, right? If I take this 20 years back, right, when we did not have that tab and that technology, right, it would happen slightly different, right? So what has technology really bridged here?
So it has done three distinct things. Number one, look, these people have their own work to do. They come once a week to give the installment amount. Every week, a particular time is allocated for them. Monday, 10 o'clock, this particular group will assemble. Now, they have their business to run, so whenever they are coming here, they are actually wasting their time. So if I'm going to do manually, I'm going to take half a day, that's like half a day of their livelihood is gone. So if I can do it quickly by visiting their office or visiting their workplace or the residence and then hold them for just half an hour, that's the time productivity saving for them. That's one. Second, I think you are expert in that particular element of social profiling. Most of the time, if you take only the bureau score or some intangible assessment of the household income, you can make mistake on both sides, which is missing an opportunity to give an credit to a borrower who is actually good borrower. And you don't get that opportunity to give that empowerment. He could have done better in life if you could extend that 8,000-10,000 rupees. And on the other side, just because of the bureau score, you end up taking exposure, which actually turns bad. So that's the second thing that happens. It really improves that credit worthiness. The third and the most profound one, I've got these 1.3 crore borrowers. Given that I can get lot more data from these customers now with QR code, UPI, boom, I've got lot more information about the cash flow. I now can offer many more products and also go back and offer a higher ticket size to this borrower. So it gives me, increase my business. It also gives me an ability to fulfill many more product requirements for these borrowers. And they then become not just microfinance borrower, but they become banking customer for me. So that's the power of it. So the technology can help me do all of these.
Thank you so much. I think that's quite insightful. Gaurav, coming to you, right? You're in a product category that without technology would be quite difficult to manage from that perspective, right? So I'm assuming that it was quite at the start of inspiration that technology came in. Would just love to understand, when you started until now, how you have seen tech actually being important in terms of being able to manage the entire distribution, the underwriting, the collection, and how you've seen it at mPokket.
So firstly, thank you to NASSCOM for inviting me and welcome to the fellow panelists. So interesting question, Rajit, because just to tell the audience a little more specifically about what we do, we are a digital lending app. So we have a mobile app through which we provide effectively small ticket loans to our borrowers, on average about 10,000 rupees. And these are mostly provided to low income, new to credit kind of borrowing profile, not really prime customers who are high income, right? So that's the segment that we try to service. Now, when I was looking to start a business, I mean, my core theme was to build a business around technology. So this was 2015. And that is the time when smartphone penetration in India was really taking off. Jio had just come in, the revolution in terms of dropping prices, internet prices had happened, and everyone was now buying a smartphone, right? So actually my motivation to start a business was to build something around that technology, because that was clearly opening up a new, distribution channel to reach customers. And as you said, it would, a business like ours would not exist without technology, because if we had to do this business of providing 10,000 rupee loans by opening branches, the math would never work, right? So in our business, again, because it's a purely digital business, we do not have any branches. Everything is tech driven, right? Right from onboarding a customer, to underwriting a customer, to doing collections, customer service, support, cross-selling, everything is digital, right? So let's pick up one piece of it, right? Let's say customer onboarding. So all of our, as of today, even all of our onboarding is through digital partners, right? So we do, we'll advertise on channels like Google, Facebook, you'll see our ads there. We'll tie up with aggregators like, let's say, Paisa Bazaar and other companies like that actually aggregate leads and pass it on to companies like ours. And there are a few other similar channels, right? Now, when you're using these channels, obviously optimizing for cost is very important. Because otherwise, if your cost of acquiring a customer is very high, especially when you're offering very small ticket loans, obviously the revenue you earn will be less. If I'm lending 1 lakh rupees, I can earn more revenue versus if I'm giving out 10,000 rupees, right? So in that sense, I think we use technology very, very heavily to optimize our marketing funnel, our onboarding funnel. So right from figuring out, which channels are performing, how are customers from a particular channel performing, what are their conversion rates, every point in the funnel. In fact, in our mobile app, there are various screens, right? When you use any mobile app, you are doing something, you're moving on to another screen, there's a pop-up, you take some action, etc. So all of those are events that we are tracking, right? And it's called a funnel in the software world. And we are tracking every funnel and trying to optimizing, seeing where are the drop-offs, how can we improve it, so that eventually for every customer that lands on the app, how many do I eventually convert into a borrower, right? So starting from there to then the underwriting, again, specific to us, unlike how loans were given out before typically, which would be just, borrower comes to you, you do their KYC, and you just look at CIBIL score. I mean, that was essentially how you would underwrite, and you would take some income proof. There's income proof, there's CIBIL score, and that is your underwriting, more or less. But again, as I explained, our customers, a lot of them are new to credit, right? Almost half of our customers, which means they don't even have a bureau record, right? And then we also service customers who are not prime, right? So customers who have a CIBIL score of, let's say, 650 or even lower, we would consider them. We would not outright reject them. Obviously, the acceptance rates in those segments would be lower, but we would consider them, right? So I think that is where, again, technology plays a very important role, because it is technology that allows us to build alternate profiles of that borrower, look at alternate data points, integrate them in real time. Because another aspect about a business like ours is that the customer is very impatient, right? They're looking to borrow a small amount of money, and the reason they're coming to us is because no one else is giving it to them, but they need the money quickly. It's typically for some sort of emergency, right? So they're not very patient. If you don't service them, if you don't give them a decision quickly, they'll go elsewhere, and there are enough competitors in the market, right? So again, being able to do all of this real time and make an accurate decision so that eventually your portfolio quality kind of stands up, I think that's where technology comes in. And then so on, right? Even the entire process of, let's say, providing support to a customer, doing collections from them more intelligently, all of this is, entirely dependent on technology. So our business, I mean, the main, I often, when I'm talking to my tech dev team, I mean, I tell them the business is dependent on you, right? I mean, any change we want to make, anything we want to do, the technology needs to deliver. Otherwise, we cannot do that because there is no offline process. So.
Absolutely, I think, Gaurav, time being the crucial factor there, right? In terms of what we are trying to bridge, and then how customer obsession becomes key out here with technology, right? The entire angle of how, I mean, thanks so much for explaining that in detail. Anup, maybe question to you, right? You've evaluated so many founders over time and looked at their business models, their technology capabilities. How would you rank technology when it comes to building a fintech business in the last 5 years and maybe before that, right? How has that changed over time? How has your evaluation of companies also changed over time? And also the market, right? Would love to understand your thoughts.
Yeah, I used to go to bank branches, and my kids, they don't know what is a bank branch. So this is the huge jump which has happened. Today if you see, if anybody has to open a bank account, anybody wants to buy insurance, anybody wants to do some investments, buy stocks, mutual funds, sit in your home, do some clicks, and you are on. So now, I am in the financial services industry for 28 years and have seen different phases. Here in Calcutta, near the stock exchange, I have seen when share transfer used to happen, then there was a separate room where people are doing sorting of, all those documents and all that. Now everything happens through DMAT. So a lot of people, the youngsters especially, would not even have a clue that what was that time. And now things have changed significantly. The point is, tech has become a very, very integral part. Without tech, no business can be developed. So the question that you asked, that how things have changed for us in terms of evaluating businesses over the years, and here we have some great examples. We, of course, are investors in Bandhan. And when Bandhan started their journey, then tech was not so important. The question of inclusion was important. They were able to reach to certain markets where nobody else was reaching. Banks were otherwise not able to cater. And here you have mPokket, where a lot of people who stay in tier 2, tier 3, who otherwise are not reached by banks or other lenders, they can reach out. You go to a shopping mall, you want to buy something, then and there you can take credit and do the transaction. So the point is, today if you have to evaluate a company, you need to see that they have all the ingredients in place in terms of how you are sourcing customer, how you are creating access, how efficient you are, how quickly can you sort of process whatever stuff you have in terms of taking decisions, how quickly can you disburse, all those things from lending perspective. And similar things applies for insurance, for example. That's also very important. So if you are buying an insurance product, that is one thing, but the most important leg is claim processing. How are you processing the claims, how quick you are, and there also tech plays a very important role. Nowadays, insurance companies are processing claims. You just sit at your home and things happen, right, over a period of time. So the key point here, Rajit, that it's very, very critical that tech is a must, whatever financial services business you are doing, and you have to keep becoming more and more efficient. That's where you create access, productivity, you reduce your operating cost, and you get the advantage of operating leverage.
No, absolutely. I think thank you for that, view on that. And if I just take a cue from Anup, what you said, and maybe connect it to say that if I look at 20 years back, and you relied on the bank branch manager, right? And today, currently the generation doesn't even know what the branch manager is, right? If I just take that question and Mr. Kesh come to you, right? You've been a seasoned banker out here in this floor, and maybe the question is, here when we talk about AI or artificial intelligence, it's saying that AI is going to come and mimic human cognitive behavior, which fundamentally means that tomorrow we can potentially have a chance of artificial intelligent banker in the room rather than having human RMs in place. And maybe that provides hyper-personalization. Do you think that's a reality? What's your view? Where do you think AI can, if technology came and solved for time and distribution, what will AI come and solve?
So, I think every conference today, or in fact any conversation specifically in the BFSI, the most used language will be AI. Now, at some point I start thinking that is it too much of a fad or it's really a reality, right? Because if you were to look at it, let's see what a bank like ours, who are like still building technology, we are just a 10-year-old bank, and we did our core banking migration 2 years back, so like practically 2-year-old technology. And what is that we are doing with AI? let's understand that and then I'll build on it to talk about more about AI. So for all our onboarding journeys, if I have to get a new customer to get onboarded, we need to do give and take 63 checks and balances to figure it out whether I can onboard the customer and capture the customer's data to be able to go back and onboard and also do future profiling of the customer from an AML perspective and also to make multiple product offering to the customers. All of these are being done using AI today. You just give one particular data, which is let's say Aadhaar ID, and do eKYC. It pre-populates everything else, which because your PAN is integrated, your everything else, all data is external India stack is integrating and giving it to you. Then internally, if you are uploading any documents, it has an ability to scan OCR, go back to the field and then do pre-populate and integrate and everything, run internal DDU. So that's part of the AI piece that you are doing. So onboarding is sort of sorted. You can practically onboard a customer in 10 minutes and give him a full-fledged real active account. That AI is doing today. There are areas of customer servicing where a voice bot or an email bot or a chat bot is solving for good 20, 30, 40, 50% of the queries using AI because the knowledge portal is getting enriched and that is happening. In the fraud detection space wherein you know that Rajat is likely to generally withdraw 20,000 rupees from Andheri ATM and you suddenly find that he is withdrawing from Chennai and Bangalore on a particular day, 20,000 rupees each, you know that it's out of pattern, it there identifies and say, look, it appears to be fraud. Somebody is misusing the card. So the fraud detection is happening. So there are such, and then of course on the credit underwriting side, lots of work is happening to be able to do that. So AI is a reality. You have no escape. The good news about AI is that AI has an ability to learn from every single mistake and every single success. That means AI is self-learning, which means AI will keep learning and keep getting better. That's the second element of it. Which therefore means that you pick up any particular area, AI will keep going to keep improving, and at some point it has an ability to go back and mimic and really sort of reach to that level. But I mean, I was in a conference, Dreamforce, a few weeks back. It was quite funny that I am sitting in the middle of the night in a driverless car and I booked the car, it gave me a direction, got inside the car, it told me to start the vehicle and it's just moving, it stops at a red light signal and then it keeps pace when there is a traffic, it changes lane and drops me to my residence. It's just quite funny, but everything is done by AI. I go into the Dreamforce, I ask the robot gives me a direction, where is this guest room where I can go and have a meet and all of that. So AI is practically mimicking. But what will not go away, in my views, will be two things. One, all the happy path will be taken care of AI, but whenever there is an unhappy situation, or whenever there is a situation wherein arguments, conflict, customer wants to talk to a human being. Therefore, if you go to eliminate customer interaction entirely with the AI, and more specifically in the Indian banking context, whenever you want to talk about investment decisions, you can go up to a point to AI, but then beyond a point, before you put that money, you want to talk to a human being. So that doesn't go away. That's one part of it. Then there are very specific areas of, say, trade or large credit decisioning. This cannot be automated using, because there are so much beyond this normal conversation and the data. Data will actually tell you that it's a fantastic thing, but once you talk to the promoter, you realize that that's not the promoter you want to make investment. You're going to, I mean, these guys would know, Anup would know, that you know everything is all looking great on paper, future, projection, everything, but you still don't want to take a call on that particular investor, particular promoter. So these are few things which will not be done, but I think AI is a reality. Because of the self-learning abilities of AI, it will really keep increasing its reach, and that's going to come. It's better that we adopt AI rather than saying that whether or why and when not.
Thank you so much. I think that's wonderfully placed. Gaurav, if I just come to you on this, right? You started with the smartphone and you wanted to do with the smartphone, and that's how mPokket came in the digital era, right? Do you think this product category will probably change, or do you think, how are you envisioning your business in an AI world maybe 5 years down the line? right? Does this change from where it is today, or does it remain in the similar genre?
Well, I mean, I think, change is a constant, right, as they say. So I think expecting that things will remain the same is a bit naive. We may not know how exactly things will change, but change is going to come in some form for sure. I think in our business, maybe, some things that I can see is, for example, right now everything is mostly app-based, right? So everyone has their own mobile app, and then you go into that app and do whatever transactions or whatever else that app is built for. But a lot of that is now, for example, moving to WhatsApp, right? So there are already flows where you can onboard a customer through WhatsApp chats, right? There'll be an AI bot that will ask you questions, you submit documents, and a lot of people may find that more convenient and use that method to to actually interact with the service rather than downloading an app. We are finding that there's a certain number of customers who even today prefer, for example, not to download the app and use a web-based platform. So they want to do the same things, but they don't want to download the app, right? Because I think there's some element of fatigue, right? How many apps do you actually want on your phone? Every time you want to do something, you have to open a new app. I think AI may kind of change how that process works. So today, any of us, if we want to do something, we'll open our phone, we'll go to the particular app that will help us, let's say, book a ticket or do something specific. Now that eventually may change where there's only, let's say, you already have Siri and all phones have their own version, but there will be some AI agent who you will instruct and then they will kind of do everything for you. That seems to be the way in which things are heading. So what that will mean is that as a service provider, you somewhere lose a little bit of control over the experience and the journey. So I think those things will evolve and you need to figure out how you add value and how you actually capture and keep the customer's attention.
Yeah, I think it's a great point. So 3 distinct areas of AI. One is, let's say I've got a loan origination system and you use AI within that. But this loan origination system also has to, let's say, integrate with my transaction monitoring system. And there is an AI over there. So how do you have the interaction between these 2 AI? And then third one, which he spoke about, that I have Bandhan Bank, a bunch of AI operating, and some of these are going to integrate with a travel company AI or an airline company AI. How do you integrate with that? Now there, I think some of the security norms, some of the country-specific legal norms, data security, etc., will come into the picture, and which is where I think the more policies will evolve. Till then, I think we've got to be a bit more careful.
Absolutely. I think I was reading a fact yesterday that 47% of internet users are today bots and not humans. And this is predicted to be 92% in maybe 2029. So at least the communication layer, right, and how agents work with each other will completely potentially change. Anup, I think taking a market view, right, if I look at 2000 was .com crash, right, and then it took probably 5-6 years to actually build sustainable internet companies, right? Probably 2007-8 was when the shared economy came in of the digital, right? So it took digital wave also to come and settle and then actually being businesses being built out of it, right? What's your thought when you look at this, right, from a market lens? How far are we really from potentially a real impact of AI, and what's your assessment?
I think the impact is already visible, right? Most of us, the fact that we are talking so much about it, everybody in the room knows about AI, and the youngsters especially, they are using it so much for their studies or, different types of other, whatever requirements are there. And different businesses have already started experimenting, in whatever be the different customer journeys or their processing journeys. So in different, if you break those journeys into different parts, you try to see, okay, where you can incorporate the use of AI. So very clearly, people are seeing the value of this. But you started with the point on .com crash and all that stuff. So, I'm not sort of capable of predicting whether there'll be some crash or not from the market perspective. But one thing is for sure that it's there, you know, and it is certainly adding a lot of value. What I would also want to add that, this is just maybe a visual feeling. At times we see that certain rivers, they become dry in some pockets and the river is flowing from somewhere else, right? And the same thing will happen in terms of business also. So a lot of business will move to some of the other platforms where the customers, start moving, and therefore the businesses will have to rethink how they get reattached to the new flow of river. So that is something is also which is anticipated, and we'll have to see how it plays out. And maybe another example could be, we always wanted to communicate. There was a time when we had pagers, but then that extinguished. Then we got normal mobile phones. Now we have smartphones. In the same way, tech is also evolving, but the core business remains. Question is, okay, they have to reorient themselves in line of how things are changing. So to summarize, it is there with a very high impact. Things are visible. Everybody is experimenting with it.
So is the crash coming?
That I don't know.
I think probably in the interest of time, yeah. Any question from the audience, maybe? Okay. So maybe in the interest of time, one question for all of you, right? We have, all of you have built businesses in Calcutta and outside, and you've seen ecosystems in both the aspects, right? Both in Kolkata and outside. If tomorrow Kolkata had to emerge as a fintech hub, right, and attracting the right set of investments and attracting the right set of founders and the businesses from a positioning standpoint, right? What does the ecosystem has from a positive, and what would it further additional need? Would just love all of your views on this. Start with Anup. Yeah.
Yeah, this is a very interesting question. I would certainly want to see a fintech hub here because I am born and brought up here. So, to build an ecosystem, there are several things which are required, right? And the first most important thing is you need to have entrepreneurs. And of course, here we have the entrepreneurs. Then the question is, okay, do you have whatever is required in terms of starting a business? So capital, but capital can come to you from anywhere. That's not a problem. If the business model is sound, people see value in that. But then to build the business, you need to have the skill sets. So do we have enough skill sets, or can it be built? So it's like, we identify each of those gaps and try to see over a period of time how each of these things can be put in place. And it's like one thing pushes the other, and that pushes something else, and then over a period of time the cycle starts working. So it's of course cannot happen overnight. It's a long-term journey, but it would be great, if something like that happens here.
So I would completely support what Anup just said. I think, especially in the services economy, it's not about the market, right? The digital market, you can be based in Kolkata and serving customers all over India, which is what we are doing, for example, right? It's also not about access to raw materials, physical raw materials, but it is about the raw material in this business is talent, right? It is skill set, as Anup said, right? So I think that is the most important piece, which is the first step towards building this ecosystem and, creating a space where enough companies can flourish. And it's not like a place like Kolkata does not have it. The raw talent is there. The challenge over time has been that the talent has chosen to migrate. and therefore they are no longer located here. So when you're trying to actually hire people locally, a lot of them have moved out. Some of them do choose to come back, but it's not a large enough number as of today to allow for a really big ecosystem to be built. So I think somewhere that cycle, again, as Anup was saying, needs to be put into reverse, where people are confident that there's opportunity, they stay back, right? Companies get built, that attracts more talent. So I think that we need to get into that cycle, and I think that is what will really enable things to flourish.
Absolutely.
I think I will probably repeat what the other two gentlemen have said. See, I think slightly different from Anup, what he said that you need entrepreneurs. There is no dearth of entrepreneurs in Calcutta. Calcutta has traditionally been highly, the spirit of entrepreneurship remains deeply embedded into the city of Kolkata and the eastern part of the country. It has always been. And as we've been saying that many talents from this state are doing exceedingly well all over the globe, not just in various parts of India, but all over the globe, definitely in Silicon Valley. So talents are also there. I think all you need is a bit of an ecosystem wherein you have to provide opportunities for entrepreneurs to flourish, get opportunities to have more companies to come and test their products. You need more talent, so talents will be there. So I think if the government, and I think the IAS and the secretary Honorable Secretary spoke about bunch of things that the state is doing, hopefully some of these will result into real meaningful outcome, and at some point we should see Calcutta emerging as a very strong, prolific entrepreneur fintech hub. I think it should happen. It will happen. I think all of us, the corporates, do have responsibilities. Some of the fintech players like you have responsibility. If we all collectively come together, I think we can make it happen.
Absolutely. I think thanks everyone for the wonderful session out here. It's been a pleasure to host all of you. Thank you.